So Australia's lockdowns are actually lasting a little longer than we initially expected. What does this actually mean for property prices? I have made videos about this before, but we're going to deep dive into how the media is portraying these negative interest rates potentially coming into play because of these lockdowns. If you're interested, keep watching. Hey guys, my name's Ravi Sharma and welcome back to Personal Finance with Ravi. Now, if you are interested in real estate, cryptocurrency, and personal finance, smash that subscribe button and drop a like for the video so we can share these videos out to more people that really need it. Now, in today's article, we're gonna just read what news.com, a big media giant, is saying in regards to Australia's lockdowns. I'm going to share my thoughts as usual. We're going to break this down and really see the impact of negative interest rates and how the lockdowns have a relationship with negative interest rates coming in maybe 2022 and what that could mean for property prices. Australia's lockdowns could lead to negative interest rates as Australians continue to attempt to overcome the grips with emotional, mental, and financial rollercoaster ride that is COVID-19 pandemic. We have seen on multiple occasions exactly how quickly our circumstances can change. In a few days, the zero COVID existence that most Australians have enjoyed for the vast majority of the pandemic can be broken, replaced by lockdowns, uncertainty, and everything that goes with it. I've been saying in the Patreon community about what the opportunity lies ahead. I was saying this about a month or 2 months ago, just about the time that I had launched Patreon, where I was like, hey guys, I want a place for me to share more of my sort of thoughts without getting smashed in the comment section on YouTube. And thankfully people came to the membership community. And really we've spoken about how these lockdowns I initially thought were not going to be, ending anytime soon, and what those ramifications really look like for the Australian property market. A couple of weeks later, we have seen it play out to a T. We are seeing some more fear come into the system, and that means there is opportunity, but it did mean that stock levels are reducing again. And I'm sort of getting the feeling that we're revisiting what March 2020 looked like, and we need to see how we can, navigate this properly so we can prepare. As Australia's circumstances continue to rapidly evolve, so does the outlook for interest rates. Just days prior to Sydney heading into its current protracted lockdown, interest rate futures markets were pricing in multiple rate hikes in the next few years. This outlook has changed dramatically since it became clear Sydney's lockdown would be protracted and there would be rising risk of Delta variant-driven lockdowns across the country. According to analysts from Commonwealth Bank, the nation's economy is expected to contract by 2.7% in the September quarter. To put that into perspective, throughout the entire of the 1990s recession, GDP fell by total of 1.7%. So we can see this in the graphic here, how big of a deal this actually is. A negative cash rate, with Sydney's lockdown expected to last until mid-November as a base case according to CBA, they have changed their outlook and now expect that the first rate hike from the RBA won't come until May 2023. This is interesting because yes, a couple of days before all of this lockdown stuff started happening, you had all the major banks coming out and saying interest rates are going up because, the economy is recovering faster than expected. And, we had RBA come out and said, look, our job is not there to control housing prices. That's just another effect of our interest rates being so low. And every time we cut it, we're cutting it for a different reason. We're not hitting that band of inflation. What's stupid really is how they calculate inflation, because we can clearly see there is a huge gap between the real economy and what this fake propped up economy actually looks like. Now, I'm not here to comment on how the government should run their business. I'm here to see how we can actually use this as an opportunity to take advantage of our financial future and take accountability, really. But even before it became clear that Sydney's lockdown would be measured in months, and that it would drag significantly on the fortunes of households, banking regulator APRA was already telling banks to prepare for negative cash rates. I have a video on this channel that talks exactly about this, where APRA had come out in April this year, sort of started talking about it and saying, hey guys, maybe you should just prepare for a situation we could find ourselves in and how you guys manage, a negative cash rate. I said in that video in detail, which you can see, that it's interesting why they would just say that out of the blue, and they also gave a specific date. So if you're interested, go definitely check out that video. The concerns emerge about the strength of the global economic recovery from the pandemic. The RBA isn't the only central bank considering negative interest rates. In February, Bank of England gave UK banks 6 months to prepare to implement negative interest rates. In Japan, Denmark, and Switzerland, they've had negative interest rates for years. While the effectiveness of negative interest rates on boosting economic growth is questionable, and the source of significant controversy, it remains the likely next move for central banks when the next crisis does come. It's interesting we talk about this. 12 months ago, when nobody was watching me on this channel, I would discuss, the possibility of negative interest rates in the next couple of years. At that point, it just was, complete fairy tale, and nobody really gave me a second thought. But now that it's becoming a reality, or at least the prospect of it coming into play, I think it's worthwhile going and checking out those videos, 45 minutes of me just ranting on about what I think's about to happen, and backing that up with statistics and a lot more research that I don't really share now. But essentially, we are now finding ourselves in a place where a lot of these countries are already in. Now, negative interest rates actually going to boost up prices? Well, I think we're going to have sort of a lag effect. I think initially we have interest rates cut, prices go up, but I think the long-term effect of this is actually going to be, showcased in the following 5 to 10 years. And I've said on this channel as well before, where we're talking about when the top of this cycle is for housing, what could cause the potential next crash. I have a video coming out later this week in regards to what is the catalyst to possibly showcase what the housing boom could look like and what could actually end that. So if you're interested, subscribe to the channel, and definitely keep an eye out for the Patreon community, which you can find a link in the description below, because I share the information there before I share it here. As multiple Chinese megacenters once looked to limit transportation and consider restrictions amid an outbreak of the Delta variant, the vulnerability of Australia's and the world economy's recovery is becoming clear. The China effect. It was once said that if China sneezes, Australia catches a cold. Leaving aside the irony of that statement amid a global pandemic that began in China, the impact of massive Chinese government stimulus is fading and economic data in the Middle Kingdom continues to deteriorate. For Australian economy, a significant slowdown in China could scarcely come at a worse time. According to CBA, up to 3,000 jobs could be lost due to Sydney's protracted lockdown, leaving Australia an increasingly economically divided nation where some states streak ahead while others fall behind. It's clear that if Sydney and Melbourne are pretty much locked down, Australia is going into a recession. That's pretty clear. Now, Sydney's still in that lockdown. Vic, I don't know, they're probably going to move a lot quicker than Sydney is because we're so far ahead in terms of having 200 to 300 cases. It is a proper outbreak now if you're looking at it in the context of what happened in 2020 and Australia as a whole. If you look at what we're doing here compared to what's happening overseas, it's a completely different story. But that's not my concern. We're here for the Australian content. Despite forecasts of a strong economic rebound of the nation's economy in the December quarter, if lockdowns continue for longer than anticipated or a global slowdown begins to impact our economy, a double-dip recession is a very real possibility. I've been saying this, double-dip recession, it's what we have to avoid. So when we were having all this stimulus come out to the system a couple of months ago, 6 to 9 months ago, I was saying, look, it's all well and good that we've got this now. We need to use this. The economy starts running. But what happens if we have another lockdown? What happens if we have another outbreak? Because we still have movement of people. Yes, we got the quarantine system of 14 days, but there's still people going in and out of the country. All it takes is one of those people to come through the quarantine system, not be detected, and then we have a massive lockdown.
Wait.
That's exactly what happened. With these scenarios presenting a series of potentially extremely challenging circumstances, the prospect of RBA turning negative interest rates presents a both silver lining and a hurricane's worth of dark storm clouds depending on your perspective. If RBA was to cut the cash rate to below 0%, it's likely that this would not only send housing prices further skyrocketing, but likely all the way into a neighboring galaxy if the economic circumstances were not too dire. It's always going to be the case, right? Do we have ASX, the share market at all-time highs, housing prices at all-time highs, except we've got unemployment through the roof and inflation is not even a thing. It just doesn't make sense. Skyrocketing house prices. If rates headed lower to the lowest level they would possibly ever reach, an Aussie home mortgage holder and homeowners would gain trillions of dollars worth of collective equity in their homes. But for prospective first home buyers, those who do not own homes, it could be yet a swift kick to their fortunes, particularly for those in areas impacted by the ongoing lockdowns, the divide between the rich and the poor. It doesn't matter if I talk about it on the YouTube channel, it is happening no matter what around the world. And this is why I say the next 3 to 5 years, now it's probably looking like 2.5 years because I've been saying it for 6 months. It's like the next 2.5 years to 3 years, 5 years is potentially where we want to be in the right camp. Because after that, I think we get to a point where there's no coming back. Yes, we're probably going to have a correction in 5, 6, 7 years time, but it's not going to be significant to the point where people are just automatically going to go, oh, well, it's like 80% off now, I can just go and buy whatever. It doesn't work like that. So I've been saying, get educated, take advantage of the time we have right now, because if you don't, the prospect of what future looks like, or the near future looking like, is actually very scary. If you had told someone 2 years ago that the global pandemic forecasts of 300,000 lost jobs and the possibility of a double dip Aussie recession would lead to skyrocketing housing prices, you would have laughed them out of the room.
Yeah, that's pretty much what happened 12 months ago on my YouTube channel.
However, with interest rates as record lows and the possibility of rates going even lower or even negative, that is where we are at. For the global economy more broadly, in many ways we are back in early to mid 2020.
Bam! That's exactly what I'm saying. I feel good. It means all those hours of countless research actually pays off.
China is closing down transport between some of these cities, the virus is running rampant throughout much of the world, and uncertainty continues to build about the global economy's future. As for Australia, with Sydney, Victoria and parts of Queensland in lockdown, our future is also growing increasingly clouded. What is clear is that the rest of the pandemic so far, big winners and big losers would be created if a scenario of negative rates were to become a reality. The only question is who the winners and losers will be. That's the question I have for you guys, is which camp do you want to be in? Everyone wants to be a loser, but aren't prepared to put in the work to become a winner. It's like when you go, we just had the Olympics finish. You watch, someone go in for the 100-meter race and you go, oh, it's like easy, it's only 10 seconds they run for. They get all this fame and they've got a gold medal, compared to, say, some of the other, events where they're like traveling for like 30, 40 kilometers, just running around or cycling around. Some of the events take days, and then you really put it into context. They're putting in the hard work. Now, I'm not saying that the 30K marathon runner isn't putting as much work as the 100-meter sprint runner. What I'm saying is we just take things at face value. We just look at a headline and go, oh, well, that just makes sense. Okay, that's what I'm going to follow. Or that we look at, the top or the winnings of someone. It's like social media, the highlights of someone's life. We look at that, but then don't look at the iceberg underneath the water where all the hard work is being done. This is the same thing. Are you willing to put in the hard work, align yourself with the right people, have the right conversations, and start making the moves now? Because in 3 years' time, 4 years' time, 5 years' time, I don't know exactly how long, but in that sort of window, are you going to be a winner or are you going to be a loser? At that point, it's going to be too late to change what sort of outcome you want. So it's better to make those small moves now when people are scared and we've got lockdowns. Take the opportunity now, whether that's investing in real estate, investing in crypto, or anything else. Just start taking financial accountability for yourself, because right now is an exciting time if you are in the winner's circle. What my job is here on this YouTube channel is to educate you, share as much information as I can so that you can move from possibly one group of people to another. And that's why we're building out this community. If you're interested in joining the Patreon community or the Confusion to Clarity online course, there's links in the description below. But I'll catch you guys in the next one. Thanks, guys.